Hello, Dan Joss. How are you today?
Doing great. How are you?
I'm very well, thank you. So, we always talk about money, but we don't always talk about the economics of money. It might seem that they're intertwined, because they are. So let's talk about some of the economic things in the world today.
Well, there's periodic government releases of information.
Oh, of course.
And that's one reason the stock market bounce around.
Okay.
Because the stock market is a reflection of what most people think, or many people think, is going to happen in the future.
Okay. Yeah. That makes sense.
And so
we think that stock's going to go up, therefore I'm going to invest some money in it now.
Well, I think that that company is going to be selling some things that people will want to buy.
Right.
And they'll make a profit. So then how much profit will that be over the next many years, and what is the value of that today? And yes, if I think that it's going to be more value than the price of the stock today, then I'll buy it today.
Okay.
But when we find out how many people are working or how many things were bought, a new number comes out and it adjusts all those assumptions we made with actual reality.
Because they put out those quarterly reports, and
right.
That's fascinating.
And some are leading indicators or some are trailing indicators, but all of those numbers all play every day, and every week actually new numbers come out. But what we're seeing so far this year, even though we saw COVID and the impact, we're seeing some good numbers.
Okay.
One of those numbers that came out is the average leverage for a household is very low. So in the past 30 years, we're now at the lowest rate of 12%. 10 years ago, for example, it was 20%. So people aren't borrowing as much, or households aren't borrowing as much as they were 10 years ago. Which means households, you and me and others, have been paying off some of their debt.
Okay.
And I think that's a good thing.
I think that is a good thing. And that's probably why interest rates are so low, because people, I don't know why interest rates are low.
Well, interest rate, and this is the trick here, is the government wants people to borrow.
That's why interest rates are low.
And so interest rates are low, but people aren't borrowing.
But we're still not borrowing.
Well, we're borrowing less. We'll always be borrowing. I mean,
yes.
if a new home buyer probably didn't pay cash for them.
Probably
a 25 or a 30-year-old, you have a mortgage.
Yep.
But if we look at all of the households in the country, those mortgage balances are less, and the car loans are less than they were a decade ago.
Yep.
So we're arguably, given this statistic, in a stronger position than we were a decade ago. So the good stock market, even though we saw a March decline and pretty much a V recovery, we've kept that and we've improved our household. Another statistic was household net worth. It's an all-time high.
Nice.
So we did see that recovery after the March decline, and we're back to where it was, and that's a topic for another day. But house values have appreciated, and stock markets and retirement accounts and all of our savings and investments have recovered. They're at an all-time high. And so that's also indicative of us being in a great place.
Okay.
Certainly better than any time in history. Another statistic says financial obligations are at a record low on a monthly basis.
That's surprising.
What we're seeing now is 15% is due for fixed recurring monthly obligations, or what we refer to as our monthly nut.
Right.
How much do I have to make to pay off what I've committed myself to? Car loans, personal loans, mortgages, any other kind of borrowing, credit card borrowing. 15% of our after-tax monthly income is dedicated to those commitments. Now, for many people, that's much higher.
Right.
But for many people, if we're retired and our mortgage is paid off and we own our cars and we don't have a lot of debt, then the number is 0 for us. But for many, it's higher than 15. But on average, 15 is a record all-time low.
Okay.
So that's also a good thing. That means on a monthly basis, we're not committing ourselves to unusually large expenses.
Okay.
Which brings me back to what we're finding now, the results of the CARES relief, the money that the government sent out a few months ago to everybody,
right,
or those people that qualified to receive it. About a third of it was spent.
Only a third?
Only a third. About a third of it was saved into a checking or a savings or the stock market. And about a third of it was used to reduce debt. And those are 3 of the 5 things we can do with money.
And I'll bet the government was really only hoping for all of it to be spent.
All of it to be spent, because that would spur the economy. Well, the smart person that received the money said, I've got some debt I'm going to pay off. I'll save some of this in case this happens again, and I'll spend some of it.
So are you saying that 2/3 of the people who received it are smart, and a third of them are doing what the government wanted?
Or maybe all of us are smart and only spend a third of what they gave us.
Okay, there you go. That could be it too.
Those are the unintended consequences of a rule change.
Okay.
And so that would argue for maybe we won't see another, a CARES 2 because it didn't work out the way they had hoped it would work out the first time. And now that I have paid off some of my debt, I'm talking as the average CARES recipient.
Right.
I've paid off some of my debt. I saved a little bit. If I get some more, I may spend it, but I may also pay off some of my remaining debt or save a little bit more. And so, and because I saved some, I'm not in the position where I need another round of relief, on average.
Right. But of course, we know that the government would change it a little bit so that we wouldn't do the same thing again and again and again, expecting a different result.
Oh, well, maybe they would.
Maybe they would. Yes. Okay.
So I think that's even good news of when money comes in, it's important to pay down debt. It's important to save for the future and then, maybe spend a little bit, which is what most people do with, bonuses or income.
Right.
So it's not necessarily how is the economy doing, and it is in a good position, but that's really reflective of all the individuals in the economy,
right?
On average, some people lost their jobs, and other people didn't, and other people are doing well.
That's right.
So it's a good thing.
That it is. Well, Dan Joss, we appreciate you being here. That's a good thing for us.
Well, thank you.
And the listeners. So if somebody wants to get in touch with you, what's the best way for them to do that?
They can call me at 757-903-2127. We will look at their individual economy and give some advice, maybe teach a little bit, and help them out. They can check our website, too, at jossbrown.com.
Excellent. Thank you for always being here.
Thank you.
Money Talks is a weekly program presented for the listener's benefit and entertainment. It is provided at no cost to the listener, and the ideas, opinions, and comments are not to be construed as legal advice, tax advice, investment advice, or other advice specific to the listener. Listeners are encouraged to seek the advice of a licensed professional or other qualified party when dealing with financial, legal, tax, medical, investment, insurance, taxidermy, plumbing, electrical, carpentry, real estate, chiropractic, veterinary, oral hygiene, hot air ballooning, etc. We have given you some food for thought. Now, call a licensed professional such as Dan Joss at 757-903-2127. Thanks for listening, and remember, failing to plan is planning to fail.